Asian markets mostly rose on Tuesday after a choppy session on Wall Street. Investors are eyeing a busy week of data and earnings releases that could provide clues about the effects of Donald Trump's trade policies. Four of the so-called Magnificent Seven companies, Amazon, Apple, Meta and Microsoft, came under pressure briefly during the session ahead of their quarterly reports. The dollar headed towards its largest monthly fall in years as investors braced for the trade war to be felt in earnings and economic data. Meanwhile, gold continued its decline on signs of softening trade tensions between the US and its trading partners. Let's get more on this now with Jameel Ahmad in Dubai. He's chief analyst at GTC. Now, Jameel, investors are awaiting some key US economic data to assess the impact of Trump's tariffs so far. Could the president's trade policies have already hit the US economy?
Well, the truth is that we haven't had enough data to really weigh what the impact has been. But of course, we've all seen the projections. For example, that statement from the IMF last week, where the US got the largest economic downgrade of all the advanced economies for 2025, from somewhere around expecting growth 2.5 to 2.7% for this year, all the way down to around 1.7 to 1.8%. On top of this, we've also got the dollar, which has had a drop of 8% in 2025. I think that's an investor reflection that these tariffs are going to weigh heavily on the US economy, which of course is also being echoed by institutions. And on top of this, what we are starting to notice is some of the consumer confidence readings are coming down towards the lowest in levels. Some readings even suggesting the lowest of this century. And consumer confidence and consumer spending, of course, is crucially important to the United States economy because it's the largest contributor of US GDP. At the moment, this is all based on the fear of the tariffs. We still need some time to digest what impact the tariffs are having on economies. Of course, this week, we're starting to see certain corporations announce some price rises when it comes to taxes and so forth, but not enough time really yet to see what the real impact has been.
Right, and there are also some major corporate earnings due to be released later this week. How's that looking?
Well, we're going to expect to see some projections, the likes of Apple, Amazon, Microsoft, and Meta. Of course, that's the holding group of Facebook, to see what impact these tariffs might have on their own outlook for 2025. If you look at the technology stocks so far this year, like all global financial markets, they have been kept in this, I would say, seesaw from this tariff uncertainty. However, there are other technology stocks, such as Netflix, are starting to hit new all-time highs. So let's see what happens. We need to see, it's one of those matters where the devil's in the detail, and we need to see what guidance these companies provide this week.
Meanwhile, demand for safe haven assets has cooled over talks of trade agreements. What's the likelihood of us seeing deals being announced soon?
Well, this comes down to whether the US administration is playing poker and is out to make deals, or whether this really is going to turn into an all-out economic war. And I think the financial market volatility we've seen across all asset classes over the past 6 weeks shows that this is anybody's game towards guessing which way this is going to head next. Gold prices, of course, hit their all-time high of $3,500 just last week. It's rallied more than 20% in 2025. Continuing what was a stellar 2024 as well. But based on these expectations that tariffs are going to be rolled back, we saw overnight automobiles seems to be the next industry that seems to have less tariffs than what was threatened just a couple of weeks ago. Gold prices have now dipped around $150 from the all-time high of last week. Let's see where the headlines hit by this time tomorrow, because everything's changing hour by hour.
Jameel Ahmad, chief analyst at GTC, thank you very much for your insights.